and now they're at the point where the credit markets had gotten so bad over the last 13 months that they're fearing something much worse.
Some of the skepticism on the Hill. Washington Post has this quote, "Where have I heard this before? The Iraqis have weapons of mass destruction and they're ready to use them," said Congressman Gene Taylor, Democrat from Mississippi. "I'm in no rush to do this." If you look at the front page of USA Today, they have a quote from Congressman Joe Barton, the Republican from Texas. He says, quote, "Just because God created the world in 7 days doesn't mean we have to pass this bill in 7 days." So we understand that the Treasury Secretary will pay a special visit to House Republicans today prior to the hearing. What will he tell them? What will we be looking for from that meeting?
He is really trying very hard to make the argument that this is critical for the economy. Secretary Paulson has an incredibly difficult task being in this position because, of course, he is a former Wall Street executive. He headed Goldman Sachs before becoming Treasury Secretary, and his messaging problem here is that he's trying to fix the financial markets that, in a way, will help an area and industry that he was deeply involved in before. And so this is one reason the Fed Chairman Ben Bernanke, of course, was a college professor, has no ties to Wall Street before. This is one reason he's really talking about the economic effects, because he perhaps has the most credibility on this issue in the country and the world on the economic risk from all of this. And this is the Secretary Paulson's big line.
So the Fed chairman comes back at the hearing and says he's warning of disaster if no bailout. Here's the headline in the Washington Times. Bernanke warns of disaster if no bailout. Take us back into the minds of the House and Senate members, each side of the aisle. You said many of them feel like they're being held hostage. What do they see as the potential consequences of inaction?
Some of them may be willing to actually take a bet here and vote against this. And if they were to vote down this plan, they could say the economy could worsen further, and perhaps some of them will be blamed. Some of them will turn around and blame somebody else in government for the crop problems that had been created over these many years in getting to this point. But they're also really facing this question of what are the alternatives and what else could be done. And so we haven't really discussed this on the Hill much. If Congress doesn't take action, what will the Treasury Secretary and the Fed Chairman do? And there's no way they don't have the authority to do a comprehensive plan like this to deal with financial markets. But they've been doing a lot of ad hoc measures over the last 13 months and do have a lot of authority on their own to take care of some of these problems on a case-by-case basis, dealing with funding issues in markets, trying to alleviate strains. The Federal Reserve is the lender of last resort for the country. It's independent for a reason, to be able to make these decisions independently for the sake of financial markets and the economy. And so perhaps there are other stopgap measures in between that might address this. But some Republicans and Democrats on the Hill are starting to wonder whether it's worth that risk to try to do that.
We go to Palmdale, California now. Thank you for waiting. Go ahead, please.
Hi, good morning.
Morning.
Mr. Reddy. I first would like to know, are you, from the Wall Street Journal, are you a conservative point of view?
The editorial page of the Journal sometimes gets tagged that way, but the news pages are completely separate, and I am an independent. I do not affiliate with any of the parties.
Okay, the reason why I asked, because a lady called earlier, and she blamed the Democrats for this situation. But the Democrats wasn't even in power in 2005. They didn't take over 2007. And this sounds just like the argument made for the weapons of mass destruction. What were the alternatives, they say? It was a smoking cloud, mushroom clouds, or whatever. I just think that now is the time for the Democrats to stand firm on their position and not back down, and their ratings will go up, because the reason why their ratings are low as the president, because they not have provided any oversight.
Thanks. Mr. Reddy.
The Democrats, as the caller noted, did have control from 2007 forward. Obviously, many of these problems were created before that under Republican control, and obviously the White House and the administration has been Republican for the entire decade. But the one reason I said that these were bipartisan failures is they go back to a deregulatory perspective and approach going back to the 1990s, and so we saw in the late 1990s a further deregulation of the banking system in the sector, and we'll be learning a lot more over the next 6 months to a year once more studies are done what role that played. But that was obviously under a Democratic president when that deregulatory law went into place.
We head to Chicago now. Good morning.
Yeah, I'd like to just make 2 or 3 points. You know, comparing this to the Iraq situation is totally ridiculous. I mean, it's totally 2 different obligations. But that aside, you know, I think the people are being misled a little bit. This could trickle down to the smaller, you know, the average person on the street. But basically, this is a financial problem, the way the banks have been loaning money between themselves. And number 2, you know, I've been to the bank. In fact, I'm looking to buy a house right now. There's money there for me to borrow. These people that have not made their mortgages or are failing on them, you know, it's been said before, some of them maybe don't deserve to own a home. Number 2, no, I don't know. I lost my thought.
Well, we got some points out there. Thanks for making them. Anything you want to respond to there?
There's really a question here that the caller touched upon on what is creating this tone of this distrust on Capitol Hill about this plan. And one key part of this is the way it's been pushed forward, almost with a threat. If you do not do this, this may happen, and this will happen. And that's one of the concerns. It may very well be true. This all goes back to the Wall Street, Main Street disconnect. There are people around the country who are still getting loans right now. The concern is what happens if you have a further breakdown on Wall Street, in financial markets, in credit markets, that then prevent those smaller banks, the smaller financial institutions around the country that may loan to homeowners, farmers, and what will happen then, because then you're really looking at a much broader based problem when the credit markets start flowing down to smaller institutions as well. And on this question of the Iraq War, obviously they're not similar, but this is really as much about the tone of negotiation between the Bush administration and Capitol Hill on these issues. And there's a lot of frustration that one of the provisions, which was really one of the more stunning provisions in Secretary Paulson's proposal, was to basically bypass any opportunity for legal review of these decisions, and giving the Treasury one department, and the Secretary will be out in 4 months, of course, and giving one department largely entire authority to run this thing. And so you're seeing a lot more discussion now between him and leaders in Congress about oversight of this program.
One of our guests today will be Congressman Brad Sherman, Democrat from California. He and others, perhaps many others at this point, are floating a plan to reduce the dollar amount of all this, I think from $700 billion down to maybe $200 billion. Give us some details on that proposal and whether it might fly.
So the critical point about all of this is the government is trying to create an auction for these securities, the bad debt that's out there on the market. And by creating an auction, you're basically taking assets that have been marked down due to accounting rules to let's say they're 10 cents on the dollar. They might in a normal market be worth 60 or 70 cents on the dollar. You're trying to create some kind of an auction so that they can actually be priced. The only reason they're priced so low right now is because it's an illiquid market. You can't buy and sell these securities. And so if you were to actually create the market, and that's what the government is trying to do, create an auction. It's been done in electricity markets and been done in a lot of the deregulatory schemes in the country. And so if you create an auction, you actually have the potential to bring up the prices of those assets. The government, it was revealed yesterday, isn't interested in going out and just buying them at the fire sale prices. It actually wants to create what's called price discovery for these. And so the question is, how much money do you give to the Treasury to go out and buy these securities? And the idea originally was maybe they do it in $50 billion segments. And in that case, you don't really need the $700 billion immediately. You're going to be doing them in series. It's going to take at least several weeks, if not months, to actually set this up, this auction process in an appropriate way. And so the argument that's coming from the House and Senate side is, why are we trying to talk about $700 billion when maybe a couple $100 billion, which of course is an enormous amount of money, $150, $200 billion. It's certainly an enormous amount to be discussed over the course of 1 week. But that is one approach that seems to be getting a lot more traction right now.
Last call here for our guest, Seattle. Good morning.
Morning. Thank you, C-SPAN. There's nothing else like it on the airwaves, and I thank you for that. My question / comment is that there seems to be not that much talk about the fact that in the same amount of time that our economy has gone down, there's been a drastic erosion of our middle class in this country. And in my opinion, it seems, you know, the middle class is a fulcrum of any good economy. And if I could, I'd like to tell viewers there's a good book out there. It's called The Big Squeeze by Stephen Greenhouse. talks a little bit about these issues. I really think that's kind of where all this where all these problems are starting to come to a head is, the wage freezes we've dealt with, the having to pay more for our health care and things like that. What would the guest have to say about that?
Thanks. Let's hear from our guest.
That is really an excellent point, because the critical question here is who should benefit from a plan like this. And middle class incomes throughout the course of this decade have been stagnant. People in the middle class have not been making gains the way people at the very top, people who are executives, people who are really the ones making the millions and tens of millions of dollars, have been doing quite well over the course of the decade. And some of it is because of these mortgage securities. Obviously, that's a small part of it. But the question is, who should have benefited from the economy, from this increase in the housing market, from home prices, and all of this that is now creating this big problem? And if the middle class didn't benefit on the way up, why should they pay for it on the way down?
Heading into this day, what else should we know about this whole story? And remind us what you'll be looking for at the House hearing today.
The important thing to look for is whether the Treasury Secretary and the Fed Chairman are how much they really are holding to their request for a simple bill, for something that doesn't involve a lot of structure to it, to allow them to really go forward and do it on their own. And so if they're willing to give up any ground, they saw the really tough reception in the Senate yesterday. Chairman Bernanke is going to be testifying on the economy this morning with the Joint Economic Committee, and he'll certainly be talking about a lot of this. But the Treasury Secretary is probably sensing that he's going to have to give up a lot more, and we're just going to have to be watching how much more he wants to give up to get this passed in a matter of days.
Our guest has been SUDEEP, REDDY, reporter for the Wall Street Journal. Thanks a lot for your time this morning.
Thank you, Paul.
And a reminder of the hearing. It happens at 2:30 p.m. Eastern Time today. House Financial Services, Chairman Barney Frank there. Federal intervention in these financial markets, the bailout plan. C-SPAN 3, cspan.org, C-SPAN Radio, live today, 2:30 p.m. Eastern Time. And of course, we'll play it again for you tonight. Now, coming up in a couple of minutes, we will talk with John Taylor. He is with the National Community Reinvestment Coalition. They are lobbying on the Hill for some mortgage foreclosure relief for folks. So we'll take more of your calls for that guest. In the meantime, back to Susan Crabtree, who is senior editor of the Hill newspaper, joining us from our C-SPAN newsroom. So the lead story says Pelosi won't jump alone on all of this. Speaker wants GOP to share ownership on the bailout package. Tell us more.
This is basically who is going to own this politically. The Democrats are saying that this is a Bush plan, that they are responsible for the deregulation that has gone on in the past few years that has led to this financial crisis, and that they are not going to be taking responsibility for passing it and putting their stamp of approval on it alone. They really want a majority of the House Republicans. They're going to need a majority of the House Republicans to pass this. And so Nancy Pelosi is saying, hey, John Boehner, the minority leader, we need your guys, and we need them. We need to know where you all stand right now. And that's why you saw Vice President Dick Cheney go up to the House Republican conference yesterday and try to sell this plan as something that is dire, that is needed, and needed right now. So it's very interesting because House Republicans balked at that message, and they, as you quoted, the Energy and Commerce Committee Chairman Joe Barton said, "We don't. I mean, the Earth was made in 7 days. We don't have to pass the $700 billion bill in 7 days." And there's very little time to figure out what kind of impact this is going to have. And because it's before such a critical election year, presidential election, and serious Republicans are facing losses in the House already, so they're very fearful that this could come back and bite them. So all of these factors are playing out, but we'll have to see what kind of reception House Republicans give it on the House Financial Services Committee today when Paulson goes before them at 2:30.
Or about the Republican Susan Crabtree. Page 3 of the Hill says that amid the financial mess, Republicans seeking to highlight energy and drilling. How much reception are they getting to this while this other big thing's going on?
Well, not very much. It seems like all of this financial crisis has taken the energy out of the energy issue for House Republicans. That's what a retiring Republican Ray LaHood is saying. he told our reporter Jackie Kucinich that this is just, Republicans would love to return to the days of August, the dog days of August, when they sat on the C-SPAN, cameras were turned off and the lights were turned off in the House, but they were railing on energy, that the Democrats left the chamber and went on recess and for August without passing a comprehensive energy bill, and they were saying drill here, drill now. And that was resonating with voters because of the high gas prices. Now this seems to be taking precedence. Even though crude oil prices spiked on Monday, they did come back a little bit yesterday, down a little bit. But Republicans would really love to return to those days. They're trying to figure out a way to tie this financial crisis and the bailout to the energy issue, so to remind voters that they were first on that they were gaining traction back in August. But Democrats did pass an energy bill last week that opened up a little bit more drilling on the outer continental shelf. And so they kind of backed down on that issue, and they became sort of insulated politically in the campaigns. Republicans have suggested that maybe if they did open drilling to in ANWR and more on the outer continental shelf, because the Senate did not pass that bill, so it's not going to become law. So they're saying that maybe those revenues could help them pay for some of this bailout. Well, that message is getting lost in this whole debate over whether this is a good policy or not to pass $700 billion worth of relief for some of the biggest players on Wall Street.
And one more quick point from the front page of The Hill. The finish line is slipping away for Congress. What was their self-imposed deadline to get out of here for the year and go to the campaign trail? And what do you see happening?
Well, it's anybody's guess at this point. I've seen different reports. They would have loved to have gotten out by this Friday. That was the goal in both the Senate and the House. But they have to do this, figure out what they're going to do on this bailout. They're going to have to try to figure out whether they want to pass an economic stimulus bill before they leave town, which was a goal that they originally had, another $50 billion. Also, they're set to pass a continuing resolution for regular appropriations funding the government. That's their regular job, but the biggest job Congress has is to fund the government, and they haven't gotten that job done either, so they have to pass a CR. They are on the path to do that today, I would believe, and tomorrow in the Senate. So next week, it's a lot to go through in 3 days. I personally have never seen Congress get that much done in 3 days. So I would doubt it, but there is something that happens late in the session, especially when a critical campaign is looming. There's something that a lot of senators call magic fairy bipartisan dust that comes out, and people start getting on the same page. We'll see if that happens this week. I think it was Kent Conrad who told one of our reporters that he thinks the magic fairy dust is used up for this year. But we'll see if that happens. They could come back next week after the Jewish holidays, the Jewish New Year holiday, or and possibly again in November for a lame duck session.
Susan Crabtree, senior editor of The Hill, as always, thanks a lot for your time this morning.
Thanks so much for having me.
Well, joining us now is John Taylor. He is president of the National Community Reinvestment Coalition. Thank you for joining us. Start us off by telling us what the NCRC does. What do you work to do?
Well, we're a trade association of nonprofit community organizations, some local governments, faith-based organizations whose essential common goal is to try to create stable communities and build wealth in people who are working, for people who are working their way up the economic ladder.
That being said, what was your group's initial reaction to the Bernanke-Paulson plan?
Well, we were, like the general public, kind of outraged that there seemed to be this singular focus on helping investment banks and investors, both domestic and foreign, from failing in this crisis, and little attention to homeowners.
Tell us what you think is missing. What would you like to see added to this bill?
Well, since the economic crisis has really began and continues to be fed by foreclosures, they really need to have a focus in that bill that addresses the mounting foreclosures. We had 300,000 foreclosure filings in the last month. That's what we used to get in a year. I met with Chairman Bernanke for an hour the day before yesterday, and he told me he expects another 2 million foreclosures in the year. This is going to continue to undermine the economy and undermine assets and securities on Wall Street. So if they don't address that, and more importantly, if they don't address it, they're going to see a lot of families who are going to be in distress and who are going to be losing their homes. In addition, homes that are next to or near these foreclosed properties are going to lose value. So it's going to be bad for the middle class and the working class.
Phone numbers on the bottom of the screen for our guests. Lobbying for foreclosure relief for homeowners, the topic here. Lines for Democrats, Republicans, and Independents. Our guest is John Taylor, president of the National Community Reinvestment Coalition. Was the first staff person for this group back in 1991. And part of your bio says you were born and raised in public housing in Boston. Yes. With 5 brothers and sisters. And for the first 15 years of your career, you ran soup kitchens and developed homeless shelters, that type of work. The NCRC's lobbying agenda from its website is as follows. Foreclosure prevention assistance, amending bankruptcy laws, and passing anti-predatory lending legislation. Let's take it from the top again. What specific kind of foreclosure prevention aid are you looking for?
Well, let me address bankruptcy first.
Sure.
This used to be the law of the land in this country, that someone's home was a protected asset from bankruptcy. That got changed a little over 10 years ago when Congress decided that they wouldn't protect that asset, but they would continue to protect if you had a boat or a second summer home, or other big assets would be protected, but somehow they removed the home. If that was back in place, even temporarily, it really would force the lenders to work with the homeowners to find ways to keep them in their homes, to modify mortgages. So that would be the easiest, quickest way. There's a lot of opposition to that. There's a lot of fight around that. We'll see whether that's possible. If it's not, what we really need is, if the government is going to put $700 billion worth of the taxpayers' money into Wall Street, they ought to ensure that the very people who created this problem to begin with, it's Wall Street who created the structure for these kind of subprime and predatory loans, they ought to make sure that they have to work with homeowners who are working, not speculative homeowners, but rather homeowners who are working, who are willing to pay mortgages, but they've got into trouble because of the nature of the product, the nature of the mortgage. They've got to ensure that these investment banks and the banks that service all these loans are willing to work with homeowners and keep as many of them as possible in their homes, those who are working, willing to pay on their mortgage.
First call for our guest, Bay Cliff, Texas. Good morning.
Good morning. I've thought about it, and it seems like for the last 30 years, lobbying money has been primarily going for financials, which is nothing more than moving money around from one desk to another, one building to another, and producing nothing. And the lobbying for manufacturing workers' jobs has not been protected, as financials have been protected simply because of the amount of money that lobbying has given to the Congress. Therefore, the rules for financials have covered them and left the manufacturing and labor sector to founder on its own.
John Taylor.
Yeah, I couldn't agree more with him. I think this is the trickle-down theory of economics. You help people on the top. What's good for American business is good for America. Excuse me, that's the philosophy. And I think, enough people are beginning to wake up, and I think people are beginning to understand that you need to elect people who think of people first, that you want a solid middle class, you want the economy to work for workers first, and that with that in focus, you assist American business to be successful. They've so deregulated our country, and especially in the financial services sector, this is what you get in a free market without regulation. You get freedom to exploit, freedom to allow greed and malfeasance to become the norm of the day, and the freedom to reap huge profits at the expense of everybody else. And this gentleman from Texas is right. Unless we have a Congress and a White House that really keeps the people in mind first, we're going to continue to have this. What's ironic about this and really bothers me is, here we are in the middle of this crisis. Really, there's really one reason. The main reason for this happening was that Wall Street created a structure that told brokers and lenders who are very unregulated, make these loans, make piggyback loans and high interest and rates that change, and where you can pay interest only, and all these kind of fast money kind of loans where fees were made. But they the Congress still, to this day, has not passed legislation that make these practices illegal. The House passed a weak version that doesn't hold really accountable the securities firms that actually created this. Senator Dodd has actually a very good bill, which is not part of the conversation now, and it really ought to be part of this bill. If we're going to bail out this industry that created this problem to begin with, we ought to make sure we have laws to protect the American taxpayer and consumers.
We go to Fredericksburg, Virginia, for John Taylor of the National Community Reinvestment Coalition. What's your question or comment?
Hi. I have a couple of things to say. I know some people who have gone through this process, and one had bought the house for $270,000, borrowed $250,000 or more on it, now owes $525,000, and they're walking away. I have another person who had a deal from South Carolina where she was paid $33,000, $3,000 a month, just to use her name, and she's walking away. Please don't hang up. I've got a couple of things to say. I also know a person who has refinanced through the Hope Now, which is now down to 2%. Her mortgage is 2% from home equity loans. Nobody's mentioning home equity, but that's a big problem. And I'm also going to say something about regulation. We keep hearing the Wall Street Journal, the guy that was on before, and this guy here. There is no regulation because Congress has made sure that they don't pass a law. And no administration can do anything without a law. All of these places were run by the states. We have the state insurance regulators and the state investment, the New York Fed running the investment banks. It's kind of really interesting how all of this is played out because there is no regulation because there is no legal ability for an administration to regulate.
John Taylor.
Yeah. No, they have the legal ability to regulate. That's the job of the bank regulatory agencies, and we have a Congress where there is, this woman might be referring to some of the independent brokers and the non-bank lenders, that they can pass legislation that clearly regulates these institutions. But she's right in the sense that there is no regulation. That's how we got into this mess. When the investment banks on Wall Street recognized that if you make these high-cost loans and particularly make them to working poor and even middle-class people, and you get them to sign on the dotted line, they're actually, as long as property values continue to rise, they're actually very profitable for these investment banks and their investors. And so they told the industry, make these loans, make them to anybody, just collect your fee and send them to us, we'll collect our fee and we'll have investors invest in it. And the oversight that should have been occurring, that could have been occurring, was not. And so we now, I mean, this woman raises a very important point, and because I want to address the first point she was making about people walking away. There's no question that people are having to walk away. But it's not unusual for people to want a home or a bigger home or to even take equity out of their home. That's always been the case. What really changed in our financial services sector is that the banks were allowed and the mortgage companies were allowed to make loans that they otherwise would never have done 10 years ago. The regulators would not have allowed them to do it, and the banks would not have made it because they would have thought they would lose money on it. But we changed the system. They don't hold them in portfolio. Banks don't take these loans and think, am I ever going to see this again? Is this person I'm about to loan this money to, are they going to pay me back? They sell it to Wall Street, they collect their fee, they're out of the transaction, more or less, and there's some obligation they have, but the truth is they're not on the hook for it. Wall Street and their investors are.
If you want to read more about our guests' thoughts, you can turn to the Washington Post. They have an article today, 4 solutions that differ from the administration's. They talk about one of those solutions being mortgage breaks, and if you look down in the piece, it's page A11 of the Washington Post. Quote, "It's about foreclosures, stupid." That quote comes from you, John Taylor, who's chief executive of the, what they call liberal, National Community Reinvestment Coalition. Tell us more about your meeting with the Fed chairman. What else did you hear that you liked and maybe disliked?
Well, we heard a lot of things we liked. The problem is when he went to Capitol Hill, we heard a lot of things we didn't like. We heard that he has a sensitivity to the fact that there are a lot of families really through little or no fault of their own, are in these products that morph, that changed over time, that put them underwater, and especially because the value of housing prices are down, so they're stuck. They can't refinance. They can't get out of these high interest rates. So we saw a sensitivity to that. And the other good news was he brought 3 governors with him. So 4 of the 5 Federal Reserve Board met with 20 community groups to listen to the anguish and the pain and the threat that this means in both rural and urban America. So he seemed to be on that page. Unfortunately, the next day he appeared before Congress and he suggested that not only we buy all these securities, but we pay maturity level, as if these things are not worth less, or as if the market is healthy. And essentially, for me, there's the moral hazard. You're paying the very people who created the problem in the first place, and you're paying them in full. And I think that's just a bad message, and it doesn't create the ability to help homeowners.
Let's go to Pittsburgh for our guest. Thank you for waiting. You're on with John Taylor. Hello, Pittsburgh.
Yes, I have a question. I guess I'm an independent voter. I live in an apartment, and I have to deal with inflation and gas prices. And I want to know why Washington needs to help gamblers. I think everybody that is involved in this is a gambler. Whether they took up a home loan that they couldn't pay for afterwards, or whether they decided, banks decided to give money to these homeowners so they can have their home. I don't think anybody should be bailed out, not even the homeowner that took the chance, not even the government or that is taking a chance on banks right now. So I think, how does this affect the person that's earning $30,000 a year that doesn't have a home? How, as a taxpayer, do I have to pay for other people that made a mistake?
Thanks. Don't bail out anyone, he says.
Right.
Just let it happen.
He makes a good point. I don't think there's a lot of impetus on anyone's part to help out speculators, in particular those who are buying properties, flipping them and selling them for a profit. But one of the common myths in this country is that everybody out there was just greedy and shouldn't have gotten loans. The truth of the matter is most people went into a loan office. Most people had decent to good credit. If they had impaired credit, it was slightly impaired. But what they ended up with is a new product. What changed here was not the interest of families to become homeowners. What really changed was the greed and malfeasance of the industry, and those are words used by Chairman Alan Greenspan. The industry was allowed to put products in the hands of people that they actually knew that within 1 or 2 years, or even sooner for many, that these families would not be able to afford these loans, but they convinced people that they'd be able to refinance, their property would be worth more, interest rates would be low. You know, there was a sales job going on here to most of the American families, which convinced people that these were safe and sound loans. And most people believe a lender when they walk into a loan office. You know, they dress nice, they look nice, they sound nice, and they believe that they wouldn't make a loan to them that was going to get them in trouble. I mean, most people don't go in to borrow money to get into trouble and to lose their down payment and to lose their credit worthiness and to lose their home for their family. So what really changed here was the way the products were offered. On the second point, and I think it's an equally good point, why should you be concerned, or how does this affect me? Property values in communities are going to continue to deteriorate as foreclosures continue to mount, and they're mounting. And the data and statistics show that even with what's being proposed, that these foreclosures are going to continue at a record rate. That really is going to reduce the value of assets in communities of existing homeowners who have prime loans, who have nothing to do with this subprime crisis. Their properties' values are going to go down. More importantly, as that continues, the economy as a whole, this gentleman who's a renter is going to find unemployment rates going up as we lose jobs in the home building sector. Who's going to build homes, you know, and where are all those carpenters, plumbers, roofers, masons, and all those folks going to go if we're not building houses? And we're not building them because we're just expanding the inventory of foreclosed properties. And then the tax revenue that's collected that pays for on real estate, that pays for police and fire and schools, that's going to be less and less, and you're seeing it now, local governments laying off people. So it's going to continue to undermine the health of the economy, and that's why we all have a dog in this hunt. And the caller from Pittsburgh and everybody else needs to be as concerned that we put a floor on this foreclosure problem.
Let's hear from Washington, D.C. Good morning to you.
Hello.
Hello there. Caller? I think he hung up. Let's try Clinton, South Carolina. Are you there?
Yes, I am. How are you?
Doing fine. Go ahead, sir.
What really bothers me about all this are the congressmen who are always engaged in the last 10, 15 years in this process and then act like they were duped or they weren't around or they didn't vote on these things and they were honest. I don't see them taking responsibility for this at all. They hide behind their Senate chamber and act like they were forced into voting for everything, and then they take PAC money and we stupidly reelect these same ineffectual people who can't oversee anything, and it's all a system where we keep reelecting these people, and they can't bring anything forth. And now Chris Dodd sits on this chairs this committee, and he was involved with this countrywide sweet home loan deal, and acts like he was innocent. And I think there needs to be a whole changing of the guard in the Senate and the House to get a new group in there that can start doing things in a better way for us. I don't know why we keep reelecting the same people.
Thanks. Let's move on to Arlington, Virginia, then we'll go back to our guest. Go ahead, Arlington.
Yeah, one thing that I never hear about is the fact that the board that sets the interest rate for Main Street, and it's supposed to be all elected officials, and the banks, the biggest banks, get to place 6 people on it. And I mean, it's a conflict of interest, but the case was brought up, and the U.S. court said that the senator hadn't been affected by it. So when's that going to be taken care of? With the interest rates going up, it means more.
Thanks. John Taylor, anything to say there?
Well, not as much on the interest rate, but I couldn't agree with the caller more. But we have in Congress the people we elect, and we're very dependent upon the people who vote to be very astute and very on top of who it is that they're sending to this city, because it really does matter. The caller's right. There's just too much both Democrat and Republican connection to Wall Street, to the banks, to corporate interests. And too often the interests of the common people are left aside. It is very difficult to get elected and to be able to serve in this building that's behind Paul, this Capitol. We need to deal with campaign finance reform, because money talks and we all know what walks. And we're seeing a Congress that is greatly influenced by the financial service sector and other sectors. And it's not that, because you say that, that doesn't mean that you don't want a strong, healthy economy, but you do need to have consumer protections and regulations that look out for the common man. And we haven't really had that in a while. And we still, with this crisis, don't have a law that outlaws these predatory lending practices.
In your work on the Hill this week, who else have you met with and what have you heard?
Well, we've been communicating with both sides of the aisle, our perspectives. I'm beginning to be somewhat optimistic that they're finally hearing what we've been suggesting now. Unfortunately, it's been almost a year and a half when we first proposed that they look at having a, what we call it Help Now. This is what we propose to them, as opposed to Hope Now, but essentially a proposal that you go in and you purchase these securities through a reverse auction, and then what happens there is they're sold at a discount, because right now the securities are not worth what the investment banks and their investors paid for it. But so they've suffered that loss already. So you buy these securities. So take a typical loan that's in those securities. Let's say it's a $200,000 mortgage. You now buy it for $160,000. Now the investor and the investment bank, they've suffered that loss. It's in there. They know what the value of that is. So you're not asking them to take a further bite. But you pass that loss along to the homeowner. So the government doesn't have to put any money in at this point, but the government acquires that mortgage at $160,000. Now it goes to the banking industry, the ones who are part of this problem, that says, now you help us resolve this. make this the mortgage for that homeowner who's working and willing to pay on a mortgage, but make sure it's good interest rates, that is not this subprime and predatory kind of stuff. Refinance this mortgage. So the government comes in, pulls it out of Wall Street, sends it back into the private sector to be refinanced, and the homeowner wins. The government is not having to pay an additional amount. So that concept is gaining acceptance in Congress. Unfortunately, Bernanke is suggesting, no, pay the full amount, even though it's not worth that now. Because their thinking is we really need to create liquidity. The crisis is great, and that's what we need to focus on.
Let's hear from Burlington, Vermont for John Taylor. Good morning. Hello, Burlington.
Hello?
Are you there?
Yes. Can you hear me?
Gotcha. Go ahead.
Yes. Good morning. Mr. Taylor, I'd just like to say I generally agree with you. The most important thing to me, the two most important things to me and many people I've spoken to is to see those who are having their primary home, their little residence, their little shelter, their little roof over their heads that protects them from snow and ice and ultimately death, saved. And very important to me because stop scaring us with threats of depression. With the prosperities you've been giving us for many years, we're not so scared of depression. And lastly, I would like to be sure that the Van Wilder class does not have Daddy write them a $700 billion check so that the party can go on. Let the chips fall where they may. If a few $18 apple martinis and a few $22 creme brulees don't have to be ordered.
Final thought from our guest, John Taylor.
Right. Well, look, I happen to agree with the notion that I've seen the Democrats as well as the Republicans come out of these backdoor meetings with the Treasury Secretary and with Chairman Bernanke and others with just a pale look on their face and understanding that we're in tough shape. We have a problem. Our economy has a problem that's far deeper than I think most people know, and what we need to do is stabilize the market. So we need to, in spite of the apple martinis and creme brulees, we need to put liquidity in the market and create confidence in the American economy. But we shouldn't be doing that without making sure that the homeowners, the basis for this crisis, that their needs are addressed. So I do want to give a shout out to my 94-year-old mother-in-law who's watching the program and wish her well.
John Taylor, president of the NCRC, the National Community Reinvestment Coalition. If you want to go to their website, it's www.ncrc.org. There's a look at the front page of the website. John Taylor, thanks for your time this morning.
Thank you, Paul.
We will take another short break, and then we will talk with Congressman Brad Sherman, Democrat from California, member of the Financial Services Committee. He'll be at that hearing today. He and some others have some alternative ideas for this bailout package. We'll hear those and take more of your calls.
The Pension Benefit Guaranty Corporation was established by the federal government to guarantee payment of basic pension benefits earned by 44 million American workers and retirees participating in over 30,000 pension plans. The House Ways and Means Oversight Subcommittee holds a hearing this morning. We'll have that live at 10 a.m. Eastern on C-SPAN 3. This afternoon, day 2 of congressional testimony as Treasury Secretary Paulson and Federal Reserve Chairman Bernanke present their $700 billion plan to stabilize the financial markets, this time on the House side before the Financial Services Committee. Follow live coverage beginning at 2:30 p.m. Eastern on C-SPAN 3, also on cspan.org and C-SPAN Radio, available nationwide on XM Satellite Radio Channel 132.
C-SPAN, created in